Welcome to The Hard Truth. We're here with John Bianchi, and we're going to get into the STR Airbnb business. I'm going to take you to school here on stuff that I need to do on my portfolio. We're going to talk about hotels, tax strategies, family trusts, a bunch of different stuff. Make sure to watch the whole episode. A lot of the times when we're on this podcast and we're doing The Hard Truth, we talk a lot about your real estate portfolio. But we're going to talk more today about the business in the peripheral and around real estate, because that's your history, your background, your skill set is incredibly impressive. And I want to make sure our viewers get a chance to really dive into that. So I guess to start, tell us a bit about yourself. What got you into real estate? What's your background? Where you are today?
Started as a financial advisor, which I believe you did as well, right?
Did, yeah.
Yeah. So from 21 to 24, built up a little portfolio, ended up partnering with a guy who was a senior advisor. Absolutely hated it. I'm sure you did too, because you're no longer doing it.
Yep.
Yeah.
Yep.
The day to day, it wasn't enjoyable. I got into it because I always wanted to start a business, and all you had to do was go client by client with that business, right? So you didn't have to have $300,000 saved up to go and buy a business. I was like, okay, I can build this up with $0 in my pocket. And I got to a certain point where I'm like, I get it. I've had enough success in the financial world, but I want to build a bigger business. I love traveling, and then I came across, Airbnbs, and I realized you could build a business out of Airbnbs, right? A lot of people get into real estate because they're trying to invest, where I was more so looking at it of how do I build a business, right? And so I started building up a portfolio of Airbnbs through rental arbitrage, property management, things along those lines, which I don't recommend rental arbitrage anymore. But then from there, what I did was, then COVID came around and wiped out the rental arbitrage portfolio. It was in the middle of a city and no one was allowed to move. And so overnight,
that'll do it.
All the bookings were gone.
I'm going to ask you why you don't recommend rental arbitrage, but maybe that's the answer.
Well, I can get to that in a second.
Sounds good.
So, portfolio wiped out. I technically owned all the contracts, but I was over it. I'm like, this isn't for me. I'm going to sell off all of these contracts to somebody else. And I still loved Airbnb, but what I realized was what I did best was understanding Airbnb data. I just had an ability to look at Airbnb data, make sense of it, and know which properties to buy, which ones not to. And I had talked to a ton of people who, they told me I got this property, and it was, in the market that I was in at the time. And I was like, that's not going to, I know for a fact you're going to lose money on that property. I wouldn't say that to them, but in the back of my head, I'm like, I know the data, that's not going to work. And I felt bad for people. And so I figured out, how can I turn this into something where I help people? And I just started very slowly, and clients reaching out, people asking for help here and there. I ended up getting to a part with the business where I'm like, okay, I know what I'm doing, but I want to get really, really good at this. And so I applied to a couple of different places that might have hired somebody that would allow me to build out that skill set. And I ended up becoming the head of data for this company called TechFester. At the time was they owned 5 properties. They're now the largest short-term rental investment fund in America. They raised $80 million, about 150 properties. Every single last one of those properties is profitable. We bought that over a 2-year period, and it was my job to figure out what market do we go in, what property do we buy within that market, and how do you drive the most amount of revenue out of those properties. And they were raising money from retail investors, stopped that to then go talk to institutional investors, and they got vetted for 19 months by one institutional investor. And after those 19 months, they finally gave them another $10 million and committed to raise another $90 million. And so that's already happening right now. And I share that because when I say all those properties are profitable, I have no way to prove it other than the statement that another individual vetted for 19 months and said, okay, we're going to give you another 100 million, right? So then therefore, yeah, right.
Because I wanted to ask you, how, keep going, because I got another question to ask you. Yeah.
Sure. So when we finish up that, right, or we're no longer raising from retail investors, and there's a really long gap there between that and institutional investor. And so I had an exclusivity with them where I couldn't find anybody else any properties, broke that exclusivity, and then went and opened up STR Search. And STR Search is a company that allows people to hire me and my team, which is a team of 30 now, to be able to find them properties anywhere across the United States and figure out, which market, which property to buy, and how to set it up, and then connect them with everybody that they need to help get that property up and running. We're now at 426 plus properties as of a couple of days ago. And we're just continuing to scale, continuing to help people. We still haven't had a failing property. So far so good.
I want to ask about the rental arbitrage, but I'll get back to that one because two things that I think are bold, but you say it with such confidence that I don't doubt you at all. That every one of these properties is profitable. None have failed. When you say profitable, is that calculated? Like if I buy a property cash, is that profitable with debt? Like, are you getting
Profitable with debt.
Profitable with debt.
Yeah.
Is there a threshold, a minimum threshold that you?
Not necessarily, but they're all turning a profit, meaning they're all cash flow positive.
So is that like, it's fair to say like a 30% down payment, 20% down payment?
Most of them are 10 for the retail investors that we worked with. Institutional can vary depending on the property.
So 426 properties, every single one is profitable. And you're going to give us the secret sauce today of exactly where to buy.
No, not a chance.
So that's what you're going to have to work with John if you want that information. But I think there's so much information that you have for us. Like, everyone's so obsessed with buying, they want to buy their duplex.
Right.
And they want to buy 5 duplexes, and that's how they're going to retire. What would you say to that person who's going to buy 5 duplexes about the path you went and why that's a better path?
So should I talk about the difference between Canada and the United States? Because the other thing I have to mention here is that all of this has been in the States, right?
You are a Canadian?
I'm a Canadian.
You live in Canada?
I live in Canada.
And you run a 30-person business in the U.S.?
Correct.
How, are all your staff, because that was the other thing, are they remote, virtual?
It's a fully remote business.
Okay.
We're an American business. I'm in Canada. We have employees that are outside of Canada and the United States. We're a global company to a certain extent. We got people in all different parts of the world. So American company, every single client is American that we work with, and every single property find is an American property.
And I guess the reason why'd you decide to do that?
Because there's no money in short-term rentals in Canada. There's not a lot, okay? Or I know you have short-term rentals, so I don't want to.
I'm okay with it.
Yeah. There's a couple of things, right? So in the States, if you're to buy a short-term rental, there's something called the STR tax loophole. And so if you buy a short-term rental and then you meet certain requirements, the government will consider that property to be an active investment. And because it's active and not passive, when you have an active income, you can use the active investment to offset your active income. And the government is all about invest your money into certain ways and you don't have to pay taxes, right? As long as you say where to put it, you don't have to pay taxes because now we don't have to put our money there, which I agree with, but Canada's a little different. So the reality is that you have a lot of people over there where they'll invest into these properties, turn them into short-term rentals, meet all the requirements, and then wipe out their tax bill, right? We have one client who saved $600,000, another client who saved $220,000. Like, these are some of the bigger ones, but tons of people who are saving $50,000 or more in just taxes, right? And that's a part of the investment because I don't have to give that money, therefore I get to keep it, therefore it's it's automatically made, right?
So they're buying profitable businesses or buying profitable properties that operate like an active business.
Yeah.
And on top of the profit, they're saving a fortune on their taxes.
Exactly. So it's a huge incentive for.
Bless the USA.
I know, right? They know how to motivate people to invest their money, right? Like that's the whole purpose of it. They brought it back where this was phasing out, but then they brought it back because it's such a big motivator for people to invest, because as soon as they buy the property, they get a huge return in taxes, or they don't have to pay the certain amount of taxes that they would have had to pay, and it gets people to put their money back into the economy really quickly, right? So anyways, I'm not going to get into the politics whatsoever, but
we'll keep Donnie out of it.
Yes. So then therefore, they do that. That's a big deal. Now, on top of that, Americans travel within America all the time. So the tourism economy in America thrives, whereas in Canada, it's not as thriving. People do travel within Canada, but the spending power in the States is far better. Way more people have disposable income in the States in comparison to Canada. Not saying that Canada doesn't, but they do. And there's a lot of places, you can go to Yosemite in Canada or in the States, which is absolutely beautiful, mountains out in California. And then you can go over to Florida, which is being in the Bahamas, depending on where you are. So you have this huge diversity of places that you could go, where if you're an American traveling within America, you feel like you've truly are exploring different areas, kind of like if we were to hop over to Europe and go see what Europe would be like, right? So what I'm trying to say is there's a lot of travel happening, and because of that, there's a lot of travel demand, and then therefore there's a lot of need for Airbnbs. And so if you're in the right area with the right property, you can turn a profit and charge, upwards of 1,000, 2,000, 3,000 for a night, depending on the property that you have, where it's located and what you're providing. So there's a lot of money to be made there. And then the real estate itself, like the single family homes in certain markets, are just far more reasonably priced in comparison to Canada, right? So we both live in the same town, and it's a very expensive town to live in, right? And the price of those homes in comparison to homes in Michigan is insane. Like, you go look, like the house that I live in is a 3-bedroom, 1 bath. I have 1 bathroom for $600,000, right?
Right.
If I were to take $600,000 and go over to Michigan and buy a property that's 2 hours away, not even, it would be a mansion, right? And so the how far your money can go in the States in comparison to Canada allows you to be able to get these properties that just offer so much more and can be such an amazing vacation rental when done properly. And then you have your tax incentive on top of that. So lower basis, more travel demand, tax incentive. And then you have a thriving Airbnb community. Does that make sense?
It makes sense to me.
Cool.
Okay. So are most of your clients American?
All of them.
You don't do as much like help Canadians buy in the US.
I can.
You can? Okay.
I can. If a Canadian wants help with doing it, I can, for sure. We just don't have a lot of Americans that reach out to us. And then when we, run ads for our business, it's just all focused in the States, right? So I do have some Canadians that will reach out and have talked about it. We've talked with Canadians. The issue, and one thing I actually want to talk to you about, is getting a loan. You got to put 30% down. Right? Which is so difficult. Then you got to make sure you get the right corporation set up that isn't going to get double taxed. Then any profits are taxed at 53% if it's considered a passive investment, which there are ways, from my understanding, to make it be considered active. And then that money goes into your corporation and gets taxed at 12% up to 500,000, which then starts to make sense, right? But then also when you go to sell the property, you don't have as many advantages, such as like the capital gains exemption that you have here in Canada. So there's you gotta be really strategic as a Canadian buying in the States, as a Canadian who's trying to figure out how to do that, right? It's not very simple. So, but I do know Canadians who have done it.
Okay.
Yeah.
Okay. So going back, so your business right now, and you said this, I think offline before we started, most of your clientele are not retail investors, or they're more high net worth people buying this for the tax advantages, or?
Yeah, so we have, most of the people that we work with are not what we consider the typical do-it-yourself real estate investor, because they're just gonna do it themselves, right? We're working with people who work for the Mag 7 companies, so the biggest 7 companies in the world, that they're executives at Amazon or executives at Google, making anywhere from $300,000 to $500,000 to $1 million a year, and they live in California, and they're going to get taxed a huge chunk of that. And so they're trying to figure out, how do I buy a property so I can avoid this tax and build up a real estate portfolio? But I'm an executive who has 0 time to start with, plus I have kids.
Right.
And so it's like, how am I then going to become a data analyst that knows as much as John and go and compete with John in the same market, right? So then they hire us, and we guide them where to go, what to do, how to set it up, and just essentially do everything for them.
Okay, so we're gonna do something that we haven't done before on that. So we're gonna put Peter on the spot in terms of his editing after the fact. So I was looking at John's portfolio before your Airbnb app, before we logged on, and the one thing I noticed was it was like pool, hot tub, pool, and it was the same picture. And I was like, interesting. I've been saying for years in our Grandman portfolio, you got to get a hot tub. You're going to hate it to manage. That's a lot to manage, but you need to have it. So I actually showed you the other property we have, which is known as Foxfield Estate. It's a rural property with indoor pool. And I'm going to get you to kind of tell our audience what exactly it is that you would point to. And Peter's going to try to overlay this after. So here's the app. You tell me, what are we doing wrong? What do we need to do different? What do we need to do better? So I'm going to need a second to look through it. Okay. But I know I took a very, very quick look, and I will give suggestions. But what I'm going to be doing here is I'm going to tell you marketing tips. Okay. That's all I'm doing. Okay. Think about it like this. If you were to have a website, imagine you had a website and you had, how do I say this? Like, you got a coffee cup that you're selling on your website, and coffee cups are pretty standard across the board. Now imagine if you were like, hey, this is a circular thing and it can hold a liquid. And that was what you put at the very top of your website. But there was something really special about that coffee mug. Maybe you could get 4 fingers in there when you're holding it, and so your whole hand can like grab it, and the handle was
really, really nice. And that's a rare thing because I got pretty big hands. I can get like 2 fingers in there most of the time and it drives me nuts, right? So you got 4 fingers you can put in there, but you put that at the very bottom of your website, right? That's how most people are marketing their Airbnbs. Because if, oh shoot, sorry, locked up. The very first thing, right? When I click into your listing, what do I see?
Oh, yeah, that's when you clicked in the living room.
I see your living room.
Right.
Every single Airbnb has a living room, a bedroom, a bathroom, a dining room, and a kitchen. Why am I competing on those 5 things?
Right.
Not every single property has an indoor pool. Now, you intrigued me enough on that very first photo to go, ooh, you got an indoor pool. And then once I see the first 5 photos, if I'm looking on the computer, I'm gonna wanna click into these and go take a look at all the other stuff. But the first thing I'm seeing is a living room.
Okay.
And so now from a marketing standpoint, I've just lost all my excitement. Everything that got me excited about this property originally, it's like gone.
Right.
But Airbnb is trying to get you to do
Nice
this.
living room.
It is, but everybody else has a living room.
Right.
Do you want to compete on the? So I have a living room too. Yours is bigger and nicer, but I have a living room too. It also has a couch.
Right.
You know what you have though? A freaking indoor pool in the middle of Canada.
Right.
Right. That's way better to get somebody. Now somebody's going to scroll down and eventually get to it, but let's not make them do that. Let's put it right in front of their faces and make it stupid obvious, and get them to fall in love with the property before they ever see the living room, right? The outdoor amenities drive more revenue than anything else. If you're going to put money towards an Airbnb and you have a budget and it's a small budget, put minimal amount into the inside, put everything else outside. That's what drives revenue. Outdoor amenities will always drive revenue way better than indoor amenities, even in the middle of winter, even in Canada, because 80% of your money is coming in July and August, right?
Yep.
So then don't worry about it making it winter proof, because all your money is coming at that point. Just maximize the amount of revenue you can make in July and August, because if you have a $5,000 bill, right? Like you got $5,000 in expenses and then you can make $10,000, great, you made $5,000 profit. But if you can actually push it and make 15 in that same month, you just doubled the amount of profit that you can make, right? It's not about taking your $5,000 month and making it go from 2 to 3. Now I only made that much. It's about taking those months where you've gotten over your expense barrier and maximizing as much as possible.
Watch it.
One more time. Yeah, sorry. I have to start off with all this because this is what makes sense, right? So now let me actually look at the listing here. So your photo shoot needs to be redone. I'm okay with the type of furniture you have in there and whatnot. So all I'm going to do is actually just focus in on the things that are going to drive revenue for you, okay? So your game room here and your indoor pool are the 2 things that are going to drive all of your revenue. Nothing else is really going to do it other than maybe your guest count. Your indoor pool is photo 44 of 54, right? Now, it'd be easier if I could show you examples out of like how to market this better, but think about how you market anything. Like we're doing a podcast right now. We have these types of walls. This greenery is here because it makes it look prettier and better and it shows better, right? So then therefore, how do you make this prettier? How do you bring this to life? How do you make it feel like there's actually things going on?
Some good looking women in floating.
Yes, exactly. Yeah.
We got a book and photo shoot.
They're gonna expect them to be there though, you know?
Sure.
No, but is there any like place for seating?
Yeah, there is.
Okay, that's a huge deal. Imagine if you're a parent, you got your kids in this pool. I want to be able to know that I can sit down and watch my kids while they're in the pool. That's an amenity. The fact that there's a seat and I can watch, it's cozy, it's comfortable, and I can watch. Now I can spend the afternoon in here with the kids. And I know in my head, I'm like, okay, as a parent who's paying for this, it's gonna be worth it. So that's one example. You could put a neon light up in here. I know all the offices upstairs are really well designed and fun.
Yeah.
This is gonna be a place where you're gonna want families to book it, right?
Yeah.
When you're trying to build out a place for families, you don't focus on dad, you don't focus on mom. Other than maybe the master bedroom, and you make it really nice for them. You put all of the focus into the kids. You know why? Because if the kids are happy, the mom is happy. If the mom is happy, the dad is happy. Therefore, everyone's happy, right? And so vibrant, colorful things, floaties. We will paint walls specific colors that are more vibrant solely so that when somebody looks at it, they're like, wow, this is a really kid-friendly, focused place. And then they want to book it there. So things that you could do in here that would be bright, vibrant colors to really amplify it is something that you would want to do, right? And then your game room is the exact same thing. So right now I can see a pool table, a couch, a foosball table if I squint my eyes. So like you don't even really have a photo of the foosball table over here.
Okay. Darts in there. I got a shuffleboard.
Yeah, there you go. So I don't even know.
Right.
You're trying to sell me your place.
Right.
And you have things in here that are you're trying to sell. So this is the best way, here, if you could hold this for a second. This is my favorite way to explain Airbnb marketing. Like, let's say I have an Airbnb and I have an indoor pool. and I have a game room, okay? Now, sorry, that's yours. This is yours. Now, I find a home and I get an indoor pool and I have a game room and I have a hot tub, then I have a fire pit, and then I have an outdoor volleyball court because I have enough space on the grass and that's not going to cost me more than $1,000. And maybe even outdoor soccer. And now I have all of these things, okay? If mine was priced the exact same as yours, you'd be a fool to book yours over mine because you're buying less. Because so we call it renting, but somebody's buying something for 3 days, right? And so the reality is like you're trying to sell them a pool table, a foosball table, a dartboard, a shuffleboard. You're trying to sell them the fact that when they're on vacation, they're going to have fun. And this is how they're going to do it and how they're going to entertain themselves, but you're not even showing it to me, right? So now I don't even know that I'm buying a foosball table and a shuffleboard. How would I don't even know, right? Now, mind you, you're in Canada, and in the market that you're in, there's not a lot of competition. People see that in-ground pool and they're like, awesome.
Yeah, there's no, yeah.
Right, but if you take it and you market it better, people are going to be like, indoor pool, awesome, but I also need to be here. And that's your difference from $500 a night and $700 a night, right? It's that you get them emotionally connected to be like, this is now the destination. This is now, that's the vacation, is the house itself, right? And if you do it well enough, especially with the size of the interior, with the indoor pool, you get people to say, hey, for our January weekend, family, we're going to go spend time at this place here. And how far away is that from Grand Bend?
About a half hour.
Well, I'm sure there's other restaurants, maybe Bayfield or something like that. That'd be a little closer.
It's a little closer to Bayfield, yeah.
Sure. So what I'm trying to get at there is like they'll spend the weekend inside and go to the restaurants at night, right? And you want the family that can afford to do both those things simultaneously and have a good time, right? So does that make sense what I'm trying to say?
Yeah, it does.
And I could go for 3 more days explaining how to market it a little bit better, but
For anyone who's not paying attention here, like on between Airbnb and short-term rentals, we do over 7 figures. And I just got schooled here by John on my wife's not going to be happy when I go home with all these new ideas that I wanted. I do want to ask you a question because I got professional photos, but you said
from a realtor.
Yeah, probably.
Yeah, you got real estate photos.
Right.
We're not selling real estate.
But I thought they're buying.
You're not selling. So when you sell real estate,
Okay.
what you're selling is how big is the room, right?
Right.
When you're selling Airbnb, it's what's it going to be like for me and you to play pool, having a couple of drinks with our wives, having a conversation. How do you sell that in a photo? That's the question.
Right.
Not how big is the room. I'm not going to, obviously you don't, like there's close-up photos of the pool. You have somebody sitting there going like this and there's a beer sitting right there. And the photo's actually of the beer with me in the background. I'm blurry, but I'm going like this, but you can see it. But the focus is actually on the drink, not necessarily me playing pool, but in your head you see it. And instantly you're picturing yourself there having a Corona in the middle of summer playing pool, right? That's how you sell an Airbnb, is you get somebody to emotionally connect and visualize themselves in that room, not say, I got a big room.
I love it. I love it.
Yeah.
You guys gotta call STR Search because there's some real gold there. And okay, I feel like I've gotten real thrown off.
I know. I've been saying a lot here.
Yeah, this has got a complete other direction.
Can I ask you a question?
Yeah, of course.
Just because, as you know, I know a bit about you. You've got a hotel.
Yeah.
And as a Canadian who's thinking about getting into real estate, I've wondered, would a hotel be the thing that makes most sense for me? Because I'm not interested in flipping. Buying in the States is super difficult. And I know hospitality. Now, I'm not hospitable, and so I need...
Me neither.
Right.
I'm not allowed at front desk.
Right, exactly. So therefore, I need to, if I do a single Airbnb, it's either myself or somebody else doing it. And I want to have a hospitality business that's large enough to be able to have the employees who can actually handle the day-to-day, and a hotel makes more sense. And so you have experience with it, and I want to just, would you recommend investing into hotels?
Yeah, I would. And you've already, when I get people call me all the time, I'm looking at buying this cottage resort. I'm looking at buying this little boutique hotel. But they're trying to buy it as what would be known as a traditional real estate investment.
Yeah.
And you're already in the right mindset with what we've talked about from the beginning on the business side of things.
Right.
You're buying a business. The underlying real estate is part of the asset in the package,
Right.
but you are buying and investing in a business, and you need to either A, have really good systems or processes to make sure that you can be more passive and more hands off. I am not in my business at the expense of Chelsea. She's hands on in the business. I'm hands off. But after I think we're in our 4th year or 5th year, we finally now have built out a team that we're like, Chelsea's been going in the morning and like turning around and walking out. They're like, we've got this. Like, you're good. Go to Pilates.
Right.
So that's really good. But from a tax perspective in Canada, owning hotels, there are some tax advantages.
That's why I've looked into it. Yeah.
It's one of the few tax advantaged options. A guy named Mike Rosehart, a lot of people follow him. He posts a lot about this. So like, it's a strategy that you can do that's really tax effective. The hardest thing though in Canada is the financing.
Okay, how so?
It's if you're buying something older and stabilized with really strong financials, that's different. But if you're buying underperforming and revitalizing, it's 3 years full financials to get out of private.
To get out of private.
Yeah.
And what's private's? What would be the difference from private and non?
So non-private is 5% right now. Private starts at 8 up to 12.
Does that matter if you can get the property to a point? So here's the reason I asked that question is because in the States there was a time where everyone was freaking out about the interest rates and they're like, don't buy anything, the interest rates are too high. And then I'm like, why don't we just underwrite this and actually see what happens if I go from a 6 to a 7 or a 7 to a 10? I got a 10% interest rate on my property right now. I have a lady who the very first lady I helped outside of the investment fund, she had a 9% interest rate, saved $50,000 in taxes, and the property makes over $20,000 a year. And then she's just going to refinance when the time comes. So my thought is like, is 8 to 12 a bad thing if you know that you can get it to a point where in 3 years you can go 5?
As long as you, as long as you know you can service.
Right.
So that's the big thing. As long as your pro forma works. The challenge that a lot of people are going to face, and you might face this less than others, is can you generate enough revenue and pay the staffing costs and pay the 8 to 12% rate? So that's where, when you get into the full stack of after renovations, after improvements, there is some ramp up time typically to start driving the top revenue. What I do all day, every day is just underwrite properties, right? So I agree with you on that. But that's just an underwriting problem more so than anything else of, I'm going to underwrite this at a 12% worst case scenario. And, what if my revenue is X, Y, Z? One thing, like, the only reason I've had the success that I've had is just simply because I'm really, really good at forecasting what revenue will be based off of what the property will look like once it's up and running. That's like the one skill set I recommend anybody who wants to get into Airbnbs. It's the biggest differentiator from long-term rentals to short-term rentals is being able to forecast revenue. Like when you look at an Airbnb, can you say it's going to make $100,000 or $135,000? What's going to be the difference, right? And how do you get to 135 versus 100,000? It's so nuanced in comparison to a long-term rental, whereas a long-term rental, you're just like, they're renting for 2,000, I rent for 2,000, done, right? So that one little skill set is where it all changes. And anyways, what I'm trying to say is, what you're telling me right now is you got to underwrite the property properly to make sure you can manage 12%. And I think where I'm trying to get to is most people, when they underwrite, assume they can get out of the private earlier. So they're saying, okay, I can carry a little cash burn for a year. I see. Knowing that I'll get to 5%. Right. But it's probably going to be more like 2 or 3 years. Yeah. So if you're just underwriting that my deal works at 12%, I can last forever, then there's no problem. But if you're underwriting that hoping to get to 5 after year 1 or even year 2, you need to underwrite 3 years on private. Or you're going to run into.
Yeah, that makes sense. Okay. And with your property, were you private to start off, and then and have you been able to switch?
No, we're still private. Now we have the revenue. We have.
So you should be able to shortly.
And we can carry it because we have good revenue.
Yeah. What makes the difference between 2 or 3 years? Because you're saying it could be 2, it could be 3. What would be the difference there?
I would anticipate 3.
Okay.
I mean,
Yeah, just
for us, it
safe
was 3
underwriting.
because what I would say the difference between 2 and 3 is how extreme your turnover was.
Okay.
So when we bought the now known as the Kiwi, there
Great
was
name, by the way. I've always wanted to tell you that. I
Thank you.
absolutely love that
Thank you.
name.
Monique, if you're watching, I'll give you the.
Yeah.
Monique was my old EA. She named it.
Nice.
So
Solid name.
we actually, I'll tell you, I don't think I've ever told this out in public. There was another name that we were going to go with, and we didn't really understand the consequences, but it was actually going to be the pineapple, which apparently means swingers.
The upside down pineapple.
The upside down pineapple is a swinger term. So we there was enough feedback for people being like that we went away from the pineapple and went with the kiwi.
You know why I know why as soon as you said it I knew it is because the buildings, the homes that are going up not too far away, that building that they have there had upside down pineapples and we'd always joke about it, right? And so as soon as you said that, I'm like, I know where you're going. Yeah.
So, okay, so sorry, to answer your question between 2 or 3 years, we went from when we bought the kiwi or the patio, there was no financials. She would not provide them. 0.
Was it up and running at the time?
It was.
Okay, and she wouldn't provide them?
I don't, it's likely that she probably wasn't claiming the revenue that she was earning.
Sure.
So she would provide, she gave us like hydro 7,000,
Right.
gas 10,000.
Okay.
She gave us like 5 expenses. So,
Okay.
the difference between 2 or 3 years will likely come based on the dramatic revenue.
That makes sense.
For us, we basically had a brand new business. There was no previous history, no previous earnings, so it took 3 years.
Okay.
Now, if you bought something that was just run down and tired, and was showing okay revenue, fixed it up, jacked up the revenue, then you might be closer to 2 years. I would say that would be the biggest differential between the two.
So what also interests me about a hotel is the fact that it's based off of NOI and not what your neighbor's house sold for, right? It's how well do I run this business in comparison, how well do I run this business? Not even in comparison to anybody, right? What's my NOI on this property? And that's going to determine what the value is.
And this is the change that we're seeing between the gurus of 5 years ago and now. Like buying duplexes doesn't work anymore.
Not in Canada.
Yeah. And I would argue that even though it works in the US, is that really what you should be doing? Like, is that really the highest and best use in your investment time? And when you talk about being able to buy a business, I think if you buy a business that has underlying real estate, I really like that.
Yeah.
And that you can drive NOI to increase the underlying value. That's what we've done with the Kiwi.
That's so, and one thing I will say on like, is that the best use of your time? I've worked with like hundreds of people now, helping them invest. And the one thing that I've realized is that everybody's different. Everyone's got different goals. So I've now gotten to the point where I'm like, do whatever the hell you want, right? If you want to invest in duplexes, like that's the thing that makes most sense for you today, right? Maybe it doesn't in 10 years from now, but right now that you think that's the thing that makes most sense, so go for it. But like for, we were talking about this before, where investing into businesses is more interesting than even real estate, right? It just happens to be real estate adjacent. And so that's why I'm, wondering so much about the hotel, because I'm like, well, that's a business. It just has real estate. There's one other thing that I was wondering too with hotels is...
this is the first time I've been interviewed on.
Sorry.
No, I like it. I told you guys, this would be a different episode.
One of the best ways to make money in Canada is to sell an active business. It's one of the most efficient ways to get taxed, because 50% of that money will go directly into your personal bank account, tax-free. The other 50% will sit in your bank account and half of that will be taxed, right? And then you have to slowly pull out the rest of the money, which will get taxed again. But that half that gets pulled out, it's amazing. Now, obviously, like there's capital gains exemptions, and Mike talks about certain things I haven't fully looked into. Family trust setups, and
I believe it's capital dividends. I'm not an accountant. I'm kind of throwing out. But if you have kids through a family trust, you can split it between the kids,
regardless of their age, from my understanding as well. So there's a bunch of advantages there. But I want to know if if I sold a hotel for $10 million. I know a portion of that is real estate and a portion of that is business income, right? And I'm wondering how the Canadian government actually looked at that, because if it's all considered a business, then $5 million goes directly into your personal bank account.
I believe it's all considered a business. I could be wrong about that. We'll consult your tax professional.
Right.
But the real estate is the tool within the business. It's like your car. It's like your camera. It's like your lights. You need it. It's a tool in order to run the business.
And so if you were to buy a multifamily, it's not considered a business when you sell it. It's just considered real estate, and you have your capital gains exemption, and then the rest gets taxed in a different way. But if I'm selling a hotel, and like the thing is like that hotel you bought right now, you could have that for 30, 40 years and then go sell it then based off the NOI then. And maybe it's going to be run down by that point. Let somebody else fix it up. But the amount that you will gain over that time frame and what you'll be able to sell it for, and the fact of how that'll be taxed at that time when you're close to retirement, that's best case scenario.
100%.
Right? Because it's so much of it is tax free as it goes into your bank accounts. When you talk about like retirement planning long term, hotel over a commercial, right? Or sorry, hotel over multifamily is what I'm trying to say.
And,
right?
Yeah. So
right? Like, am I missing something?
No, you're not.
Okay.
And what you're actually kind of pointing out to is what is my business. What people know, but
that's actually one thing I don't know is what your business is.
Well, I have 7. So
okay, yeah, right.
The main thing that most people know is the hotel, the cottages, and they know me as a mortgage broker.
Okay.
Those are the 2 main things people know me as. The hotel and cottage business is I posted equally for years about my long-term rentals and apartment buildings.
Okay.
But people like the sexy.
Yeah. Oh,
people remembered the beautiful cottage.
Yep.
The hotel, the kiwi.
Yeah.
So they remember that. But in parallel, I have several big apartment buildings.
Okay.
And my business is I generate money in my earnings as a mortgage broker.
Okay.
That's my primary role. And I park that in real estate, which is split between my hotel cottage business and my long-term multifamily.
Okay.
So to answer your question is which one's better, they're different.
Okay. Yeah, there you go.
They're
Yeah.
different. Like the multifamily, we have some properties that I go to regularly because I just believe in being a hands-on operator, but my property manager takes care of them.
Right.
It's very passive. The hotel business, you do need to manage your managers a little bit more. We have great staff, and if they're watching this, I hope they do, because we believe in them and we
sure.
trust them. But it's an active business,
Yeah.
and you need to be involved. And I don't think you can fully, oh, I got a manager.
Yes.
You got to stay connected to that business. So we buy the hotel, the hospitality stuff for more of a shorter term, active appreciation, forced appreciation, and we're buying the multifamily for more long-term bank accounts.
Okay.
Set it and forget it. Like
Yeah.
we're paying them down, they're going down. So I don't think there's a right or a wrong. It goes back to the investment profile. I got more into the active side because I liked it, but now I like the long-term apartments as well.
Because
I'm more passive.
it's the financial advisor side of you where, you got some bonds and you got some, riskier stocks, right? And that's how I think about it as well. So it totally makes sense. I got a question that you may not want to have recorded. You don't have to, maybe we can talk a little bit offline, but is the mortgage broker business considered, is it a business and you're putting money into a business, or is it coming to you personally? Because that also makes a difference of how you're investing that money, whether it's like you're investing it through a business or you're investing it personally.
So it's a company, it's a corporation.
Okay.
So I have a family trust set up. I have a fairly complex corporate structure.
I'd like to talk about that afterwards, or if you could recommend people I could talk to about
For
that.
sure.
Yeah.
You get to a certain point, you definitely want to create that structure.
Yeah.
And it's tax advantages and just like it's about for me right now, what I'm trying to do is create one business structure.
Yeah.
I have multiple companies, but I'm creating one management company to manage everything.
Yep.
And I'm trying to, like with the Kiwi and the Kiwi cottages, we fully vertically integrated. The only thing we hire out right now is snow removal.
Yeah. Okay.
Everything else is
In-house.
staff.
Makes sense.
Cleaners, maintenance, management. Everything is in-house, fully vertically integrated, so we can cost control.
Are you open all year?
Yes.
Yeah. Okay. Staffing up and down.
Like way down in the winter time.
Yeah.
Like we close the bar and restaurant in the winter. Well, like we're open, but like
Sure. But for the okay.
no.
That's I definitely would love a referral or information, or love to talk to you about that side of things too, because as I continue to build out a portfolio, I want to be smart about it. In family trusts in Canada, good. In the States, unbelievably good. I wish we had the similar setup. Like,
I can't say I know enough about the US ones, but the Canadian ones are pretty strong.
Yeah. There's no point in talking about the US ones here, but it is it's crazy the advantages that they have over there as a Canadian or a family trust.
Yeah.
But anyways, I asked you a lot of questions there about your hotel.
Amazing. It's amazing.
There's a handful of hotels in Grand Bend that all need to be updated. You know what I mean?
So the answer is right now, I'm interested in those.
Yeah.
As long as Chelsea doesn't have to operate them.
Yeah.
Because Chelsea's at capacity. For those who don't know, we're just announced we're having our third child in November.
Let's go. Congrats.
So
just had my second 2 months ago.
Oh, congratulations
Yeah,
to
thank
you as
you.
well.
Yeah, yeah.
So yeah, she's maxed.
Yeah.
I definitely have investors who are interested in funding these projects.
Yeah.
But from an operational side, we're at capacity. We can't take on more.
Is it just a matter of, well, I mean, you run businesses, I run a business, like, you know, you obviously need a point person. I don't know how long we're running on. Are we good to keep talking about
I'll
that?
tell you what, let's talk about the hotel
Okay.
offline.
All right, sounds good.
The question we like to ask people is, what's the hard truth? What's the hard truth for a real estate investor? What do people need to know?
I mean, I can only speak to what I know. And the hard truth is that running an Airbnb or buying a property in Canada and turning it into an Airbnb is really like extraordinarily difficult to do right. And doesn't always make sense. You know, some people, you'll have more cash flow in comparison to a long-term rental, but the amount of upfront capital you got to put into the property, like furniture wise, it's like, well, how long is it going to take you to get that money back? Right. And, you know, as somebody who knows Airbnbs inside and out, I had yet to like thoroughly look into Canada and be like, this is a place that I want to invest really, really badly for XYZ reason. Now, again, I know you do it, so I'm not trying to put it down. You got to just do it. You know, the way you do it matters. It really, really matters. Like you got to have the right property, the right area, buy it at the right price, set it up the right way, and figure out a way to have a competitive advantage and feel like the amount of profits that you're going to pull out of that property are actually going to be worth the effort in comparison to taking that money and investing it somewhere else in the Canadian market.
Well, and what you said is exactly right. We've done it, but we grinded it for 7 years to do it. You're talking about being able to almost plug and play into the US versus 7 years of grinding.
Right.
Right. So yes, it is possible in Canada to do it with immensely more capital, immensely more effort. So that's a great hard truth. John, this is fantastic. We're going to talk about some stuff offline here. Exciting to have this air, and make sure you catch the next episode.